Thanks for joining me on my market report. My name is Mike, and this market report is on mortgage rates. We get into the backside information that you may not get on the media or any other sites. We kind of get you the information what's impacting mortgage rates on a daily basis, whether it be something from the economic calendar or perhaps the mood in the markets, or perhaps it could be headline news or geopolitical, what have you. There's a lot of different things that could be different variables that could affect mortgage rates, and we're here to kind of give that information out to you. These videos are great for those who are in the market to look for a refinance or perhaps to buy, and there might be kind of watching where rates are moving. So we're kind of here to help you guys out. So when you guys are ready to lock in a rate, this will kind of guide you as to perhaps perhaps give you an educated decision as to make before you decide to lock in. This could potentially save you money because if you got like a long escrow period or a longer period, that could be a little bit more expensive for lock periods. As the longer you go out, the more expensive it becomes. Uh, so if you can shorten that up, that might save you some money in your lock terms. That's why hopefully these will provide you the necessary information to save you guys a bit of money in the process as well. A little bit about myself is I am a loan officer. I do work with a national lender. We're here to answer any questions you might have, if it's whether it's different about mortgage rates itself, as you're kind of in these videos, or if you got questions about different programs that might be available out there as well, or if you got just general questions that you think we can answer, we're here to assist as well. So please feel free to reach out. We'd love to earn your business, so please give us reach out to us so we can at least show what we can do for you guys. And I think you guys will be satisfied. We got a lot of different, whether it's programs, great rates. We can do loans in all 50 states. We'd love to be able to talk to you a little bit how we can help you guys out as well. If you guys are looking to refinance or purchase, we can get those pre-approvals ready for you guys so that way when you guys are ready to submit an offer, you're ready to go. In the meantime, why don't we just jump ahead and take a look and see what's going on with the market today. We got one item here on the economic calendar, and that is the PPI, or Producer Price Index. This is an index that gauges the inflation level on the wholesale side of things. So it's kind of what we like to lovingly term as the Rodney Dangerfield of the inflation data, because it doesn't always get the respect. It's primarily because wholesalers, even though it could rise in their areas, they could be losing more money or cut in the margins. They don't always pass that on to the consumer. So we concern more about your consumer price index, like your CPI or your PCE index. We kind of look more heavily weighted, but we do kind of look at this because over time, if costs keep going up, they have no choice but to obviously pass that on to the consumer. So we do kind of keep an eye on this. To some respect. So we'll take a look at the month over month for the PPI for the month of October. So in September, it rose 0.5%. Forecasters calling for 0.6% increase, and it came in at expectations. Now, if you strip out the food and energy, we get the core PPI, and that's really what we look at, because those are two variables that we cannot control, and we like to see what the basis is. So it's month over month. Back in September, it went up 0.2%. Forecasters calling for 0.5%, and it went up 0.4%, so slightly under expectations. However, its year over year remained unchanged at 6.8%, as you can see across the board here. Now, headline news, not much out there. Again, it's the investors are kind of looking at what's going on, quite earnings. We got some Fed speakers been kind of out there again after the FOMC, so they'll be out there speaking. They'll be listening to see their thoughts of where now they'll be looking towards in the future as rate hikes. So now we got the tapering off the table. They'll be getting that the middle of this month as they reduce their purchases. This will be something that will, they won't be looking at that. They'll be looking at the possibility of rate hikes in the near future. So today, basically, we'll look at the chart here, the mortgage-backed securities. It looks a little lower, even though you see up 25 basis points. That is due to a rollover we have. So what happens is about after every 30 days, roughly, we have what they call, which is why we have these 30-day locks. That month's mortgage-backed securities get bundled up and get sold on Wall Street, and then we begin a new month. So it's kind of like a reset in pricing, but it doesn't affect mortgage rates. So we don't see any of that in our pricing or our rate sheets. But a lot of times it will drop down about 30 basis points in the Japanese calendar or candlesticks here. It will drop down but in reality is it didn't affect our mortgage rates or pricing. So we'll start do a reset is what it means on here. So right now we had a reset. It went lower below the 25-day moving average. And right now we're approaching 25, I'm sorry, not 25, 50-day moving average. We're approaching the 50-day moving average and having a hard time kind of pushing against that today. And but that's enough to give us a good bump in our interest rate. I mean, a good bump in the negative rate. So rates should be improved a bit today in terms of mortgage rates. So that's our good news, our good takeaway from this. Now, the 10-year Treasury, as you can see here, it's dropped, started below its 50-day moving average, and now it looks like it's testing two technical levels, which is good news for us. And right now it's sitting down at about 1.4, just under 1.42 on the 10-year Treasury. So adding less stress to mortgage-backed securities. Now, if you take a look at the national average out there on conforming loan limits, we have the 15-year at 2.48 and the 30-year fixed at 3.07. So we did see some improvements in our rates this week, which is obviously, again, very good news as we've been about towards the end of August or October, we've been getting a slight improvement here, which has been good news. And the FOMC, when we talked about that last week, the pricing we've been talking about for a while that it was expected. It just got priced into the market, which is why we didn't see a negative balance towards that. So or get a negative reaction from it. So, anyways, again, we're here to help. If you guys got any questions or we can help you guys out, please reach out. If you guys like these videos, help us out. We'd greatly appreciate it if you can smash that like button and follow. We're here again, here to help you guys. We'll look forward to see you guys in tomorrow's video. You guys have a great rest of the day. Thanks for watching. Bye-bye.